with their Infrastructure Yearbook 2023. According to this report, the infrastructure spends in the Indian economy are expected to double in the next 7 years. My colleague Vivek Iyer caught up with Rahul Prithiani and Jagannarayan and Padmanabhan, two senior directors at CRISIL Market Intelligence, and spoke to them about the opportunities here.
Clearly, it's a big build-out number that we are talking about. And I think this will be led by some of the core infra sectors such as roads, railways, urban infra. I think many of them will require significant amount of, funding needs going forward. And along with that, we also have the key areas within energy, especially linked to clean energy, which will see a very large build out led by the renewables as well as smart meters. And I think it will provide the entire ecosystem on the transportation side, on the EV side also, which will need to be kind of developed, and the supporting infrastructure, which again provides opportunities. So all companies in the infrastructure space, be it on the EPC side, some of the asset owners and some of the financiers who are active in this space, will see good amount of opportunity as long as you're able to get your act together with respect to your balance sheet as well as some of the operational performance. And I think of late we've seen good amount of policy action in many of these spaces. So I think it's a fairly large opportunity across the board. So it is not just limited to kind of one odd segment here.
You've mentioned that the biggest share of the infra spend will go towards green investments of almost 30 lakh crore, and that will come in the renewable energy space. So talk to us a little bit about wind projects, talk to us about the opportunity in solar. And in fact, there is also a counter argument which states that especially in the last couple of years, the importance of thermal has actually come back. So in this context, how do you see spends going, especially in the wind as well as the solar space?
So I think clearly wind, solar will clearly be leading the entire charge as far as the investments on clean energy is concerned, especially the solar side. Various segments within solar, be it the IPPs, be it grid connected IPP solar, open access, rooftop solar, as well as, solar needed for green hydrogen. All of these are expected to grow substantially. We are expecting about 150 gigawatts of additions on just the IPP side. In addition, about 15 to 20 gigawatts each on each on the open access as well as the rooftop side. Further, green hydrogen will provide an opportunity of another 30 odd gigawatts over the next 5-7 years. So it's a fairly large, investment that we see there. Wind, due to its economics and time of day availability, may be slightly slower, but net, it's a fairly large opportunity on the non-fossil fuel side. And over the next 7 years, we are expecting that amount alone to be about 22 lakh crore out of the total 36 lakh crore that we are, talking about. So I think that will be the key driver. In addition, you will have a good amount of investment that will happen on the transportation side of close to 6.3 lakh crore and another 1.5 lakh crores towards green hydrogen as well as the overall ecosystem there. So collectively, it's a fairly large number that we are talking about.
Thanks for that, Rahul. Jagannarayan, to come to you, and I want to bring the point of the transportation space and the transportation issue that India is going to face. You've mentioned in the report very clearly that you expect two-wheelers to outpace other segments in sales up to 2018, and after that you expect tractors to go ahead and take the charge. So many talking points. Do we have the infra for electric vehicles? So many things, especially as far as passenger vehicles are concerned. Where do you see transport headed up till 2030? And along with that, who are the key beneficiaries in this particular value chain?
Absolutely. I think the surface transport is what we are talking about out here. And to clearly call out, and from a sustainable infrastructure perspective, we are expecting close to 6.3 lakh crore coming across. Today, if you were to look at from 2017 to 23, this spend has been at 0.6 lakh crore. So we are seeing about a 10-time fold increase, which is going to happen between 24 to 30 and split significantly on the creating of the infrastructure for this. So battery manufacturing, charging stations, all of that is going to have a significant push And we're expecting out of this 6.3, 3.7, that is more than 50%, would be coming in this particular segment. About 0.4 lakh crore will be in the auto value chain by the OEMs, which will be there. And the optimization aspects like the investments in ethanol, CNG stations and others would be about close to 1.1 lakh crore. So that's the overall breakup which is there. By 2030, yes, you're right. There will be great adoption by the two-wheeler segments. The three-wheelers also would have got significant. They've already catching up significantly, and they would continue to be there. The PV part of it would also be there. In multiple parts, if you were to look at it, we would have close to about 30% adoption in the EVs part of it at different sub-segments having a different variation in this, more so on the two-wheelers and the three-wheelers, then the commercial vehicles and others will take some time to catch up, but that's where the opportunity is going to be there. To sum up, it will be two-wheelers, three-wheelers, which will have a significant uptake, then the charging infrastructure, again, where it's going to be there, and we can see a lot more new technology coming through and also investments coming through in this.
Okay, well, let's do one thing. Let's take a short commercial break on that note. But on the other side of the break, we'll talk more about the commodity market. Manisha Gupta will be joining in. Stay tuned.